Five Below raised full-year guidance, driven by strong comparable store sales and store growth. This led to a 9% rise in its stock price. The shares moved from $217.13 to $219.17. The key issue is whether this guidance signals lasting momentum or just a temporary gain. This is the key point for investors reviewing the setup today. Five Below is a discount retailer that leverages viral products and social media trends to drive sales. In Q1, same-store sales jumped 23%, beating analyst forecasts of 18%. This was partly due to a squishy dumpling toy that went viral online. However, the company remains cautious about future spending as tax refund-driven demand fades. Five Below raised its fiscal 2027 comparable sales outlook to 6%-8%, up from 3%-5%. Same-store sales rose 23%, beating analyst expectations of 18%. This strong performance drove a 9% increase in the stock price over 5 days. The company also lifted full-year profit guidance, though it remains cautious about consumer spending as tax refund-driven demand fades. Five Below's management remains cautious about macroeconomic conditions and consumer sentiment. Rising fuel costs, persistent inflation, and a weak labor market are key concerns. The prior comparable sales range was 3%-5%, while the new outlook is 6%-8%. These factors could affect future sales and earnings performance, as highlighted in the company's recent earnings call. This is the key point for investors reviewing the setup today. Five Below has a $12.01 billion market cap and a forward P/E of 22.24. At current price of $217.13, analysts average a $260.48 price target, 96% above the current price. This gap implies room for growth if the company meets or exceeds expectations. Analysts estimate a 20% gap between the current price of $217.13 and their average target of $260.48. This suggests potential for growth if the company meets or exceeds expectations. With 21 analysts giving a buy rating, there's strong confidence in the stock's future performance. The next move depends on macro conditions and guidance execution. At $217.13, the stock is below the $260.48 analyst target. If the economy improves, it may rise further. If risks materialize, it could fall. The next catalyst is second-half guidance and consumer spending trends. This is the key point for investors reviewing the setup today.